Today, we're comparing Etoro and Freetrade to see how they stack up.
One promised social investing across 140 countries and then quietly added commissions after 17 years of marketing itself as free. The other promised to democratize investing for the United Kingdom specifically and then had to give away the feature it charged for because a competitor was offering it at no cost. Both restricted buying on the same stocks on the same day in January 2021. Both blamed someone else. One has been fined by the securities regulator in the United States and is being sued by the consumer regulator in Australia. The other received 2 formal supervisory notices from the financial regulator over influencer advertising and was then sold to a buyer nobody has been told the name of. The global platform that charges the most. The local platform that cannot compete on fees. Same generation of users caught between them. The global platform was founded in Tel Aviv in 2007 by 2 brothers with a vision that retail investors should not have to trade alone. The automatic copying feature launched in 2011. A user picks a trader, allocates funds, and every position that trader opens is replicated proportionally across every account following them. One decision by one popular trader generates 1,001 transactions if 1,000 people are copying. The platform takes a spread markup on every single one of those transactions. That is the engine. The program that pays traders to be copied rewards the top tier with up to 2% of the assets following them each year. The incentive is to post returns that attract followers, not to protect the people following. Aggressive strategies look better on the leaderboard. Conservative ones do not attract copiers. The copying feature is the differentiator no competitor has matched. It is also the mechanism the platform profits from most aggressively. A user who copies a trader using leverage and that trader loses, the copier loses proportionally. The Financial Dispute Resolution Service investigated a case involving significant losses from a leveraged copying arrangement and ruled the platform was not liable. The terms protect the platform. The copier absorbs the risk. A separate case documented a user whose copied position was frozen because the underlying asset was delisted from a sanctioned market. They could not close a losing trade. The feature works until it does not, and when it does not, the platform's terms ensure someone else pays. The local platform was founded in London in 2016 by 3 developers who looked at the traditional brokerage market and saw an entire generation priced out. Monthly subscription fees just to hold a tax-advantaged savings wrapper meant younger investors were not investing at all. The platform eliminated those fees, launched a mobile interface designed for first-time buyers, and funded itself through crowdfunding rounds that turned thousands of small retail shareholders into customers and evangelists simultaneously. The total raised reached roughly 149 million across all rounds. The competitive threat arrived from a platform offering the same tax wrapper for free, with a conversion fee on foreign trades nearly 7 times lower. Users migrated. The local platform responded by making the tax wrapper free in September 2025. The pension wrapper followed in January 2026. Both moves were necessary. Both removed the features that justified paying for a subscription. What remains in the paid tiers is a lower conversion fee and interest on cash that barely covers the cost of the subscription itself. The stock selection is roughly 40% smaller than the competitor that forced the pivot. The conversion fee on the free tier is the highest of any commission-free platform in the market. For anyone buying international stocks regularly, the annual cost difference runs into the hundreds compared to the platform that triggered the change. Then it was sold. January 2025, the company was acquired. The buyer was not disclosed. The community shareholders who had crowdfunded its existence were not told who now controls it. The financial trajectory before the sale showed revenue growing 45%, losses shrinking, and a break-even quarter achieved. Whether it was sold because it was succeeding or because the founders decided it could not survive. The fee war is a question the undisclosed buyer has not answered. The fee structures tell the story of 2 platforms that started in the same place and ended somewhere very different. The global platform marketed itself as commission-free for 17 years, then added per-trade charges in August 2024 on top of the spread markup that was always there. Withdrawal fees apply on certain accounts. An inactivity charge activates after 12 months of no trading. Crypto carries a separate fee on both directions. The conversion fee varies by location and membership tier. It is the most expensive platform of any reviewed in this series. The local platform never had spread markups or per-trade commissions, but its conversion fee on the free tier is the highest in the market, and the only way to reduce it is to pay a monthly subscription that lost most of its value when the tax wrappers became free. Both restricted buying during the 2021 retail surge. The global platform cited extreme volatility. The local platform blamed its currency provider. Neither faced lawsuits. The global platform's regulatory record includes a fine from the securities regulator in the United States for operating as an unregistered broker for crypto assets, and an ongoing lawsuit from the consumer regulator in Australia alleging that leveraged derivatives product design harmed 20,000 clients. The local platform's regulatory record includes 2 supervisory notices over influencer advertising that violated rules about misleading vulnerable consumers, and a separate warning over promotions implying regulator endorsement. Neither has a clean sheet. The global platform's problems are about products. The local platform's problems are about marketing. Support across both platforms follows the same pattern users describe with every broker in this series. Chat-driven, no phone line, generic responses, escalation only through regulatory complaint. The global platform failed multiple attempts to go public and remains private with no published financials. The local platform was sold to an undisclosed buyer. Neither gives users the transparency to assess the financial health of the company holding their investments.
Etoro for anyone who wants to copy experienced traders automatically across 140 countries, where the social investing model provides a path for beginners no competitor has replicated, and where multi-asset coverage spanning stocks, funds, derivatives, crypto, and futures in beta makes it the broadest global platform available, accepting that commissions were added after 17 years of marketing the platform as free, that the copying feature incentivizes visible risk and the platform profits from every copied trade, regardless of copier outcome, that the securities regulator fined it for unregistered crypto brokerage, that the consumer regulator in Australia is suing over derivatives product design, and that account freezes and failed withdrawals are documented across multiple countries with chatbot-driven support. Freetrade for anyone in the United Kingdom who wants a simple mobile platform for stocks, funds, and tax-advantaged wrappers, now free on all tiers, where the interface is built for first-time investors and where pension access at no extra cost is something the global competitor does not offer in this market, accepting that the conversion fee is between 2 and 7 times higher than the nearest competitor, that the stock selection is 40% smaller, that 2 regulatory notices documented growth outpacing compliance, that the platform was sold to an undisclosed buyer, and that withdrawal delays and transfer failures are documented across 2025 and 2026. The global platform that charges the most. The local platform that cannot compete on cost. The question for both is what you are paying for when neither calls it a fee. Every choice is a trade-off. At least now you know what you're trading.